Good day, folks, and welcome to the Shark Cage BlackFin's podcast series. My name is Keith Kemp, President and CEO at BlackFin. I will be your host today. To start, I want to thank our sponsors. A real special shout out to all of BlackFin's preferred partners, Mortgage Flex, iEmergent, Cloudvirga, Take 3 Technologies, Lending Pad, Prudent AI, and our most recent and exciting preferred partner, Finastra, and so many more. All these firms doing extremely great things for the mortgage and lending industry today. If you don't know about them, I encourage you to check them out. Okay, so let's get started here. Today, I'm really excited to have in the Shark Cage one of BlackFin's preferred partners, Jessica Evett, VP of Product, Software, and Development at Cloudvirga. Welcome, Jessica. It's great to have you here today.
Thanks. I'm happy to be here.
Cool. We're going to have some fun. But before we get going, let me formally introduce you, Jessica, by sharing a little bit about your background. Kind of shows you kind of know what you're talking about when it comes to product and in this space. Folks, as I said, Jessica is the VP of Product Software and Development at Cloudvirga. Jessica has an extensive career in product development, project management, and services in the banking and mortgage banking space. It goes back a good 20 plus years. Most notably going back to her time as a project manager and senior IT project manager at Saxon. I remember the old Saxon days, no doubt. Prior to that, she served as Vice President of Business Solutions Technology at Bank of America. And another key career highlight was her role as VP of Servicing Project Management Office at NationStar, now in charge of product development at Cloudvirga. She is actively listening to her existing and new customers very, very closely to really understand not only what do they want and need now, but is really strategizing around where the puck is going, to use that Wayne Gretzky analogy, if I may. But from a customer experience standpoint, where is the puck going? Which is why I believe Cloudvirga continues to deliver a leading technology ecosystem for lenders. That basically helps stop the customer shop fast. And that's the key, right? In origination. As a former originator, Jessica, I love that focus at Cloudvirga and what you're doing from a product development standpoint. So it's great to have you. You're ready to jump in. I promise not to bite, maybe challenge you a little, but we should have some fun while doing it. Are you ready?
Yeah, absolutely. Love talking
Cool.
about this. As you mentioned, I've been doing this a long time and, I have a lot of enthusiasm and excitement about where we're going. So looking forward to it.
Yeah, well, I know our listeners are absolutely going to appreciate your perspective and key insights and in some guidance that they need. According to CIO Magazine, they did a 4-year study and found that U.S. organizations, as a technologist, is so disheartening and fortunate, and I'm sure you're going to feel the same, but U.S. organizations wasted over 30 billion on unused software that on average over 37% of a firm's enterprise software platform is not used. So when considering you guys have built the optimal borrower and lending ecosystem that really advances that user experience, based on a lot of that user feedback that you've incorporated, as lenders need to invest in more advanced technology in 2024, what advice do you have for them to make sure they're eventually fully optimizing their new state-of-the-art technology? What should their approach be to really benefiting from your part in the tech stack, from really benefiting from this big investment? I mean, we see a lot of failed implementations where we get called in to step in and help finish the implementation or testing or development effort in order to successfully get this technology live. We deal with that a lot, but how can lenders make sure they take a more measured approach? What's your advice to them to make sure that, okay, we get live with this initial, phase one, if you will, and then from there we need to keep building on that through maybe it's a continuous improvement methodology or framework. What advice do you have for them to make sure that they're not missing out on all these other capabilities within their tech stack, their new tech stack that they stand up in the year 2024?
Well, that question certainly gets my spidey senses tingling as a, project management office owner and various tours of duty. I would say first things first is you really have to understand what your goals are as an organization. What problem are you actually trying to solve, right? You may say, I don't
Mm,
like my point of sale today because it doesn't have a good borrower experience, or I don't like it because I'm not getting the service that I expect. And those are all, obvious reasons to start looking for an alternative. But ultimately, what is your end goal? What is the experience that you're trying to deliver? Whether it's a point of sale or any other type of solution, I think it's don't get swayed by the cool and interesting technology. Do your level of due diligence to make sure that the technology is going to meet you where you're at. But I
yeah,
think it's also really having clear measures of success and what success looks like for you, because a lot of the failed implementations or challenges that I've seen over the years, a lot of it is we weren't all on the same page about what the end was supposed to look like. So obviously starting with the end in mind. And then when it comes to the investments that you make or the providers that you select, I think there's obviously the build versus buy concept of, can I build this myself or is buying it reasonably better? In a lot of cases, it depends on whether you're a tech first shop or not. Most lenders are not. So there's obviously then the let's find the right solution for us. And I think when it
mm,
comes to point of sale or really anything lending centric, you want an organization that is comprised of people that have actually done it. So we as an organization are filled with people that were former originators or servicers or operational leaders. We're not just, technology people coming in with no real background in what it is that you do. We actually
sure.
do have a frame of reference. And so we bill ourselves as a partner. Now, that's not partner in the sense that we are your dev arm and we're just building whatever it is you ask for. It's partner in the sense of what's going to make you competitive. Are we doing the thing that other lenders are doing, others, point of sales are doing? Is this a differentiator for you? Is this wasted effort? So trying to really have that dialogue about whether the investment really makes sense, and what the outcome or expectation ultimately is. So I think not just the idea of the solution, it's really who you're engaging with and making sure that you have that partnership. But I think when it comes to value proposition, it really is doing the work up front to understand what it is that you want and what you're expecting to get out of it, and then appropriately staffing it on your side as well, right? It's not just
Mm,
a integration partner coming in and doing all of the work. You guys, as the lender, ultimately own the success or failure of the solution. And if you don't have the right people engaged, that tends to be where things start to sort of go off the rails as well.
yeah, wow, those are some great words of wisdom there, and I can actually vouch for a lot of what you were saying there. I mean, we go into a lot of clients and they say they want to replace their tech stack, or we're doing that with a very large credit union right now, but they want to replace the tech stack and they want to implement it. And one of the first questions we always ask is, how are you going to measure success? Just what you said. And stunningly, a lot of them just say, well, measure success. We're looking to replace our tech stack. Okay, but let's back into the why. What's the motivation to replace the
Right.
tech stack? And they have to go introspectively to really think about, how are we going to measure success? And it becomes a very interesting conversation when you start the overall consideration with that question alone. But back to your point of also that you you should, too many times, as you've seen in this industry, a lot of lenders go into this as a transactional experience. I'm buying new technology. I
Right.
buy it, you set it up, you throw it over the fence, I use it. Instead, the more appropriate approach is always to be looking for partner, that partner that's going to help you meet those guidelines, those measures of success, those goals, those benchmarks. at the initial launch, and then they'll work with you to further mature the platform as you evolve as an organization. First, we hit those benchmarks. Now, what are the new benchmarks now that we're live and we're starting to increase productivity? We're being able to do it at a fraction of the cost of what we used to do. So the mindset needs to be less of that's my technology vendor, more of that's my business partner. Is that part of what I'm here? I heard you saying?
Yeah, I think so. The reality is, I in theory could just buy a point of sale solution or any other bolt on and just kind of incorporate it. But your point of sale could, to some degree make or break you if your loan officers aren't adopting it and your borrower experience isn't, solid. You're in a situation now where you've treated it as if it's a technology thing, which is, from a business perspective, I'm not really super interested in getting involved. I can just license it, bolt it in, great. It's already connected to Encompass or, any other LOS. So there's not much for me to do because it's not really directly integrating with my system. But the challenge is if you really have to understand what experience you're trying to deliver, whether that's to your loan officer or your borrower. Your loan officers can leave too, right? It's not just that your borrower could find another lender. Your loan officers may say, you know what, you're not delivering me what I need. I'm going to go find, another opportunity. So it's being engaged and being a part of the dialogue because ultimately lenders do things differently. And every point of sale will tell you they have an off-the-shelf solution, and that is in theory true, but that doesn't necessarily mean it works with your workflow. So there has to be a fair amount of discovery up front that's this is how we intend to use the system. Are those things configurable? Would that be custom development? What would that look like? Can we really kind of fully understand the scope of our engagement? And that makes things better for you as the lender and for your tech partner, right? Because there's a clear roadmap. We all are on the same page about what it does and doesn't do, what we'd potentially want to pursue to make it work for you. Those are often the conversations I have when I find lenders are looking to replace a point of sale is, I can't get the changes I want made, or I can't get anybody to listen to me. I'm looking for this thing and it's not being prioritized. And
Yeah,
that's often the reason they're looking to leave whatever came with their LOS too, right? Well, this is
yeah.
just kind of off the shelf. It's not their core competency. It's really not that great. It's available. It's sort of free with my enterprise agreement, but I'm not really getting what I want out of it. But it's really, you have to be able to articulate what that is, and that requires that you have the right people really at the table with you from your, tech partner, but also from your, business and tech side within your own organization so that those measures of success, those expectations are all clear and everyone sort of goes into it on the same page.
And part of what I hear you saying in our underscoring there is, I think too often, and I've seen it, and I've been a lender where I've bought technology and had to implement it myself, is not setting reasonable expectations on the implementation at the very beginning. Meaning, okay, we expect to be live within 6 to 9 months, and that's what the vendor sold me, that we'll be live in next 6 to 9 months. We could be live in the next 6 to 9 months, but we should go live once we've determined what the key pillars are to this implementation based on customer experience, based on business process flow, based on those goals that we set as our key metrics for, measuring ROI based on, the implementation of this project at the outset. And I think some of those expectations get a little unreasonable that it would only be 3 to 6 months to implement, when the fact is to do it right, it may take 6 to 9 months. And subsequently, lenders put, when they go in with those unreasonable expectations, they hit this wall at some point and go, just get live. And then they shortchange all the other potential features or benefits or rules that could be put in place to get a bigger ROI and benefit from that implementation when they do go live. So would you echo that, you see some of that, and that lenders need to probably just take a pause when they're thinking about implementation, and be a little bit more reasonable in their expectations? Would you agree with that?
I would. I think the reality is, having been on the other side, right? On just get it done. Like, why aren't we finished? Why is this taking so long? Let's make something happen. What concessions can we make to get it across the goal line to at least get something out, right? Um, a lot of times, projects, even internally, are date driven, right? What can I reasonably do in this amount of time? Or I'm only funding projects year over year, right? So I have a project budget or an initiative spend that's really only on a 12-month cycle. So sometimes things get self-selected out. Well, that'll be a 3-year effort. So obviously, we're not going to get that approved. But other times it's, how can I sort of manipulate what I need to get done within that 12-month window?
Yeah.
And so I'm kind of at an MVP one, but really my executive leadership or whoever cut me that check for that initiative is expecting I'm at MVP three by the end of the year, right? So I think there's, to your point, the level setting of expectations about what's reasonable within a time frame. But I think the conversation needs to lead from the perspective of, here's what I'm after, right? Can you deliver that, and what would that look like? And
Mm.
then we negotiate from there on what that time frame looks like, what that pricing might look like, right? If there's a different sort of engagement we could have to expedite those types of things, right? Because most of your point of sale providers, your LOS, really any software that you're licensing outside of hiring a consulting firm to do T&M development for you, they have other clients. They have a shared roadmap. So when it comes to what you're looking for in a partnership, whether that's customization, new build, whatever the case may be, you're very unlikely to find something off the shelf, certainly in this space, because you are so customized in how you manage your workflow, that really understanding and doing that work up front to understand the actual time frame and investment required, I think is really key. Because
Mm.
there, really, anyone will sell you that it's a quick implementation, but that's, with the asterisk that you're not changing anything about the core nature of their
Yeah.
platform.
Well,
And so if you don't do that discovery, you as the person making that decision are going to your leadership or the board and saying, yeah, it'll be 3 to 6 months and great. And everyone says, all right, high five, let's do it. And then you're in month 7 and you're not done. And the conversation then isn't happening to say, well, actually, we didn't do enough discovery, and it turns out there's this core fundamental component of the workflow that we do differently than the other 7, 8, 9, 10 lenders on a platform. So now we have to kind of customize that. If we had done all of that discovery, that would have been evident to us, and we could have made, a core decision based on that. But that's, typically what you find is things are sort of driven by a date or a cycle that is desired, as opposed to what's actually reasonable to be done and what that would really look like. And then having that collaborative dialogue about, okay, well, what can we do to go to market? What do we minimally have to have? What's then the, additional secret sauce, right? What's the real differentiator in constructing it from a business perspective, not just what your tech provider can offer you, but really focusing on, for us as a lender, to differentiate. Certainly in the wholesale space, this comes up a lot with everyone trying to compete with United Wholesale. What do I
right.
have to do to kind of get in that marketplace? Um, and sometimes it's kind of throwing stuff at the wall. Well, we do this differently. We want to do this, so the broker has to own that, or we want to control that because we don't want the broker to do it. And it's not necessarily enough of like, is that a niche request? Is that really moving the needle from a market perspective? Or would this be the better option? And let's really map that out. And Cloudvirga is willing to be that kind of partner or that lender. Um, but we have to really have that kind of dialogue up front when you're engaging with your potential tech partners in terms of like, what does that really look like?
Oh, I think that's great advice. I mean, you're spot on. You can be that way as a vendor partner, but you have to be that way as a lender partner as well. And that's some key advice there, that you shared. And part of being a partner is it's okay to be, in order for a real partnership to work, you've got to be transparent. You got to be vulnerable. You got to be, a little bit out there to say, listen, I don't get it. I don't know. If you don't have the answers during that discovery call, because then you can really dig into it. Because every decision, I was told my kids, every decision, has consequences. And so if you're not, going in fully informed, and then let's work together to make sure that we're fully understanding each other and not just looking to sell technology as a vendor or buy technology as a vendor. We need to have that partnership. So great advice, great words of wisdom. Thank you, Jessica. Very good. All right. Jessica, thank you so much for being with us today and joining me in the Shark Cage. This has been a tremendous discussion on the key topics ensuring that a lender's technology ecosystem is most focused on the need for a greater borrower experience and what to look for in a technology partner like a Cloudvirga. Folks, don't hesitate to learn more about how Cloudvirga is helping lenders by going to their website, www.cloudvirga.com, and reaching out to Jessica and Maria and their team. Until next time, this has been another exciting episode in the Shark Cage. Thanks so much for being here today.
Thank you so much for having me. Appreciate it.
Pleasure.
To find out more about the show or the information provided in this episode, visit BlackFin Group online at www.blackfin-group.com.